good morning, good evening, good afternoon. What a day. Interesting day. Post FOMC, investors are getting the idea that things are going to be a little bit tough. And word on the street is that there's going to be Bitcoin troubles ahead. Oh, he's gone all negative again. No, I'm just quoting the messenger. Don't shoot the messenger, is what they say. So it's been a bit of a tricky day, to say the least. We're going to talk about my trading that I did earlier on, where we were looking at trying to capture effectively reading the price of the S&P during a specific time. And I've read some of the comments from people. One guy's like, you're buying or buy, sell, you sell here, you buy there, you sell here, you're buying here, the offers are coming in, the bids coming in. I'm only telling you what's going through my mind, no different to what you're thinking when you're looking at the chart. But I speak it out. I have to speak it out, because if I just go into dead looking zone where, how am I making any sense of that? How am I making any sense of that? I need to avoid going deaf when I'm at the charts. So I have to speak it out. And those of you that know me and have watched any live trading videos that I've done that are on the Traders Reality website, those sessions, I am not stopping. There isn't a moment where I'm not talking about the actual move. And what you'll find is when you trade the way I trade, not that anyone will ever trade the way I trade, because we are all individual. I see the charts one way. You see the charts a different way. Your relationship to risk is different to mine. You might think of a $500 loss being, oh shit, that's really bad. I might look at a $500 loss and be like, that's the cost of doing business. And that's what we have to think of it as. When you do things, when you trade the markets, ladies and gentlemen, you truly do know who you are. It is a reflection, and people throw this around, and even some of the top traders out there, they'll say it. But when you really understand it, you can relate to it so well. If you're blaming a system or you're blaming an approach, you don't know yourself. You are ignoring yourself. And that's the problem we've got. We are the problem. But we're going to talk about that very, very shortly. I'm going to show you exactly what happened straight after that live. Of course it went up. But we did catch it. That's the plan. Never trade based off what is made or what is lost. All right? You got to get into that zone. You got to get into a trading zone. Whatever style of trader you are. Which leads me on to this story of Bitcoin this evening. Why are the troubles ahead with Bitcoin? What are we going to do about this? What can we expect from Bitcoin? Well, we've had some decent news, to say the least, and we're going to get into that very shortly. And then we're going into tomorrow with the non-farm payrolls, which is yet another big market mover, which, to be frank with you, ladies and gentlemen, all of what we've seen so far is going to suggest that the unemployment rate is probably going to stay lower. Non-farm payrolls are going to come in way better than what they're expecting again. And we've already been given an insight into how the labor market is, which is only going to be leading us into one thing: inflation. And that's really the topic. So let's get into the charts. Let's have a look at what's been going on. I hope you're all doing well. And let's get with the program, man. Okay. This is on Bloomberg, man. I saw this, I was like, what is going on here? But what's it all relative for? Apparently, the state of crypto is anything but strong. Why are they being negative? Industry boosters say they've learned their lessons from the last crash, but regulators need to move faster to protect a new wave of mainstream investors from the same old story. So, hold on. The state of crypto is anything but strong. But at the same token, we need to get legislation stepping in so that we can protect a new wave of mainstream investors. That's who we need. We need the mainstream investors, the mom and pops. We need the people at libraries, or the ones that go for, drinks, coffees, and that eat cheese at the weekends, or go and try and catch, or What bird watching? Those are the people. You know, they've got a retirement and they're like, oh, I've got a couple of, 50, 60K, or I've got a couple of grand. I want to put it somewhere. And they're going to go to a mutual fund or, a savings account. And they'll be like, where can I put my money? And the financial advisor will say, if you want a little bit of risk, you might want to get involved in crypto. And they'll be like, what's crypto? It's digital money. Oh, I'm not down with digital money. That's a little bit of a funny thing. Digital money is paper at the end of the day. How can it be digital? It's called Bitcoin. Bitcoin. What's that? That's mainstream investors. You think mainstream investors are like the fat cats? Clearly not. They're not the fat cats. No, we're talking about retail investors. Going into it, look what it says. After more than a year, the freeze of deep crypto winter has thawed. Bitcoin prices have surged to new heights. Venture capital firms are raising funds to invest in cryptocurrency startups, and gloating crypto bros are back to mocking skeptics with the words, have fun staying poor. Once again, the people pouring millions of dollars into meme coins that depict dogs in knitted hats or drooling cartoon sloths are being described as smart money. When the developer of a sloth coin Slurf accidentally destroyed 10 million of the funds he'd raised from early buyers, the attention only fueled a massive spike in trading volume, 2.7 billion worth in 24 hours. That's what I mean. That's the thing about crypto. You can have a crypto coin that is called whatever, glasses coin or stupid coin or lame coin, dead coin or any name coin, whatever, okay? If people, human nature doesn't change, they think of meme coins and then they're like, okay, if it happens to this coin, it's going to happen to this coin, it's going to happen to this coin. Again, cryptocurrency is ideological. That's it. That's why you can never kill crypto. You can throw so much at it. You can put legislation, but you cannot kill the idea of crypto. Do you think cryptocurrency is an occult? Let's be honest now. Do you think crypto is like being on the inside? That dude over there, man, he's into crypto. Nah, man. Nah, I'm not down with that guy. Yeah, but they make a lot of money. Yeah. They may make a lot of money, but they rip people off. They're shifty. It says it there. While the average crypto fan of the last boom talked in terms of Lamborghinis and get-rich-quick schemes, the industry's new spokespeople are CEOs in suits who focus on regulatory compliance, politicians whose favorite word is innovation, and traditional financial institutions pitching cryptocurrencies as a sound way to diversify your portfolio. The problem for the rest of us is that crypto markets remain fraught with manipulation and scams. Yes, the ex-CEO of Binance is now serving a prison sentence of 4 months. That's your cryptocurrency, ladies and gentlemen. It's bloody good to be here. Bitcoin. Here's this article. Bitcoin slump triggers warning of trouble ahead for the global markets. Now, to summarize this, and then we're going to get into the charts. What this article goes on to talk about is investors are no longer seeking risk. That's the thing. We only go into this over here and whoa, what are you doing? No, thanks. We only go into this and we'll just refresh this for a second. And you can see that exposure is around 20 to 40%. This is going to change soon. But we've just had a little bit of volume coming into play in the stock market. Quickly going into the NASDAQ and the S&P to understand if we're in an accumulation day or not. Now, volume is light. See, we haven't had the volume above the 50-day moving average, okay? The 50-day average of volume, sorry. And it's still not above that red line. So that tells me that we haven't really seen that much buying activity. But we have had decent news with regards to Coinbase. Now, Coinbase has done very well, but they do believe that Coinbase itself has already priced in its earnings and it's done really well. And it's not that much of, where is it? Where is the gap up? I believe. Here we go. It's actually a gap down, yeah. So it's trading negatively in out of hours, which is making sense given that Bitcoin is now pulling back. Which is why we've got to be very careful with this. We've had the full recovery of the red vector candle, and we're going into the the non-farm payrolls. this week, and this is where it gets very interesting, okay? Non-farm payrolls, average hourly earnings, unemployment rate, and the ISM PMI. These are triggers right here, which is going to make people be less risk. They're not going to be putting risk down. The article goes on to say that investors are not really looking at getting involved in Bitcoin. The Hong Kong Bitcoin ETF turned out to be a flop. That's the words right here. Here we go. Where is it? The demand for the products in terms of the ETF subsequently fizzled, and markets failed to get a tailwind from this week's launch of a spot Bitcoin and Ether ETFs in Hong Kong. And it goes on to say that discounts to net asset value for some of the US portfolios have notably widened, highlighting the challenges from Bitcoin volatility. So what it's saying here is Bitcoin volatility is starting to put investors off. They're not used to these price swings in their portfolios. They're not. There's a way that they actually split their portfolios. You're going to have aerospace and engineering, okay, or defense-based stocks like healthcare, food and beverage. Like, these are the stocks that will always operate regardless of the current stance of the economy. High inflation, low inflation, high interest rates, low interest rates. And investors will always put their stocks or get those stocks and put them in their portfolios. So if your stock portfolio is made up of 60% tech stocks, you're going to be getting smacked about. Even 80%, it's really bad because you can see the volatility in the tech market, okay? But if your stock portfolio is made up of roughly, let's say you have 40% defense-based stocks, say you've got 30% tech stocks, and then you've got another 30% utilities or transportation, then you've got a wide range of movement in your portfolio, okay? And you can offset any exposure to high interest rates, okay? If you have, for example, say you hold transportation stocks, and the cost of oil is going up, those transportation stocks are going to get smacked and they're going to feel the pain of high oil prices. So then you'll be reevaluating the situation and saying, hold on, if oil's price is going up, what's going on in the world? Maybe there's going to be tensions overseas. That's going to naturally lead oil's price to go up. What about inventory issues? Maybe if they are going to say they're going to cut down on the oil inventory, which is what they've had in terms of the OPEC, then that's going to impact oil's price. So then you're going to say to yourself, well, if we're going into higher interest rates, that means the cost of business is going to be going up. That means they're going to be scaling back on certain commodities. I'm naturally going to be filling my portfolio with oil-based stocks just in case that we do get through that situation where oil's going up. That's, in my opinion, that's how I would approach a stock portfolio. Now, if you're going to be looking just exclusively at cryptocurrency, well, they split it up, don't they? You've got the Web3s, the metaverse, and what have you. And it's all down to the types of utility of coins, DeFi. So, but if you do chuck cryptocurrency into your portfolios, I would strongly recommend that you keep it to a specific percentage. Unless you are one of the Chads and you're the moon boy, then you can absorb that with your portfolio. I would be very reluctant to add cryptocurrency to an existing portfolio purely because of the volatility that it holds. When it comes to stocks and portfolios, ladies and gentlemen, there is math behind it, okay? But in my opinion, it's not. The math is outweighed by understanding the industry of the stocks that you're selecting. That is so critical, in my opinion. So, yeah, that's that story right there. Happy days. Now, Apple jumps in late hours, so it seems like it's good news on Apple, all right? The idea of Powell and the interest rates, in my honest opinion, investors are going to be waiting for data now, and it's all going to be inflation. That's all we got to focus on. So the thing that we need to focus on the most is we need to be looking at oil. We need to be looking at gold. Where's gold? Okay. We also need to be paying close attention to the yen, because this is going to help us understand. This is going to help us understand if Bitcoin can go up. Look, I've said this all week. Yen goes up. Dollar goes down. Bitcoin goes up. Doesn't really go up, but it went up. Quickly go into the S&P. Look at that. What a wonderful wonderful move to the upside by the S&P. Full recovery of the vector wick right there, ladies and gentlemen. It was always going to do it. And this is where I got stopped out earlier on in the live stream. So I went short. I went long on the S&P inside of this range. So it was just about 3 o'clock, but it kept on marking lower. But I was reading the depth of market, and some people commented saying that this is absolutely stupid and what have you. Well, until you do it, until you understand what you're looking at, I voice it out to help you guys understand my thought process. I could sit quietly and not say a word, and you ain't going to learn nothing. What is it to me clicking a button? You ain't going to get nothing from me. You can watch me trade. Cool. I place a trade entry. Done. But you don't care about watching me take a trade. You want to know why I took the trade. That's the whole point. You want to understand, how did you know to get in at that point? Well, historically, that's what makes me think that there's going to be a reversal pending, okay? So earlier, we were on our account. Where is it? I'll just bring it up for you. It might not let me do it just yet. But that account, here we go. So you can cross-reference it with the live stream today. So that account was the performance account. Here we are. Let me just click that. There you go. It was the performance account number 73. And this was where I took a $1,300 loss on this account because I was trying to grab the interest down inside of this zone over here. Okay. And I was a little bit gutted by it because ultimately I wanted to show you guys my thought process. The second the live ended, I loaded up. How many was it? 1, 2, 3, 4, 5, 6, 7, 8. I loaded up 8 accounts and started to play the game. And effectively, we came out relatively well across the board. Wait, so here is this. Look, I had to scalp this. The $1,300 loss, I had to scalp my way out of it. And you can see where the losses were coming in, all right? But then I managed to recuperate those losses to be in a profit of $300. And we ended up on the day, here we go. We cleared the day with 2, 5, 6, 7, $16,200. We finished the day. And that was if you look at my win rate for each of the actual accounts, it's not that good. Oh, look, here we go. 38% win rate on that one that I recovered back on the $1,300 loss that I did today. This one was 57% win rate, 62% win rate, 55%, 57, 66, 57, 62, okay? And ignore that 206. That's just over a sum of trades. But collectively, 20, 60, about 40 trades today nearly, and we finished net $16,000. From a $1,300 loss, we managed to recuperate it and some more back. So that was me trading all of this. And what I was giving you earlier on, the breakdown, is exactly what's going on in my mind. I'm talking it. You have to. When you're a scalper, that's what you've got to do. You're continuously having to react to new information. Anyone that says, oh, you're just talking gibberish, shut the fuck up, man. You come and do it. You come and do it in front of 2,000 people, because you are being tested, ladies and gentlemen. And when you're trading a scalping, you can't judge your trading off one scalp. You got to smack in 300 scalps, ladies and gentlemen, and say, you know what? Today's a good day. Today's a bad day. Today's trading was what? I need to add those up. So 18, 17, 18, 20. 7, 30. Yeah, so about 40, just shy of 40 trades, man. 40 trades is the sample size, you know? And forgive my French, ladies and gentlemen, but it does get a little bit frustrating when people come to trading and they think it's a piss easy game. It's not, especially as a scalper. People think that, you know, you scalp, you lose. Yes, you can lose. I demonstrated that today, but I lost $1,300 relative to my account. It was nothing relative to the account, okay? But I don't think about the money. I think about the play. So the play that I gave you guys earlier on, where we were watching price smack the lows, they kept sweeping and sweeping and sweeping straight after the live. They planted a 555 offer, smack bang, at right here. That's where the offer was, right in that area. They started from there. That was the cue for me to load up. Bang, 2 contracts, 4 contracts, and scaled it. And we pretty much rode the whole move up towards this red vector candle. I was done. Finished. Didn't need to do anything else. You know? I challenge you. Challenge you to trade depth of market. You look at it and think, what the? But then again, I'm a bit obsessive when it comes to trading. I will sit and watch it rigorously. I've recorded the live. I've recorded my. I've got live trades where I've recorded it and sent it over to the guys in the platinum section. They've got all that, but I have got a library. I'm telling you, I've got a library of depth of markets where I've recorded it, and then when I've got free time, I will sit and watch it. And you just witness price going up and down. And the notes that I get from that tell me that whenever they are making moves to the downside and they are at the lows of the profile where they're sweeping and it looks like it's just going to keep on going, that's intention. That's where I know they're trying to trap traders to go short, because the guys are picking up the bids. They are passively buying. No different to what Bitcoin did yesterday. Look. Bitcoin did exactly the same thing. Where was it? Inside of this area here. They marked it lower. They kept going and going and going. Then they dropped it and then quick reversal back up. It's the same thing over and over. Even here, they come back into the zone. They shifted back out again. All you've got to do, ladies and gentlemen, is to look at specific points in the chart. Wait for a reaction. This is your reaction. This is your reaction. That is your reaction. Maybe not so much, but it did lead to a nice little flavorsome move up. This is your reaction. That right there. And then when you take the metrics, but when you take the logic of the hybrid system and put it together at specific points in the chart, you're then going to have confidence to take the trade. You know? I never let loss of money in a trade ever get me, because I've just paid $1,300 today in the live stream. We paid $1,300 to understand that we were wrong. Okay, just because we were wrong, does it mean that we stop? No, I wasn't even trading at the best time possible. The best time for me to trade is when the London closes. That's the best time. And that's how the S&P managed to climb up. London closed, they just continued to mark up. Happy days. Those are my spots. Those are my times. Do you know yours? Or do you just come to the chart and sit there and hope that your trade is going to work in your favor? Don't do that. You're just going to burn money. 1 minute you're going to be winning, like what Bitcoin did here. You're winning 1 minute, next minute you're not. Pay yourselves. I'll always say it. But I say that as a scalper. So it's my job to pay myself. I know my pain threshold. I know how much I'm prepared to lose. Why? Because I only need to open 10 contracts, all right, on the S&P. 10 contracts, wait 3 ticks. No, not 10. 15 contracts and wait 5 ticks. I've made my money back. And the S&P can sweep up pretty quick. And you can easily get 5 ticks. All you got to do is wait for it to get to the lows of the profile where you don't see any bids at the lows. And then, bang, you take your trade. You know? His name is Constantino for what? What's going on here? Look, if you didn't lose once in a while, I would cancel my subscription, as I would know you aren't real. I love that you have the guts to be a real teacher and show us what's up. Teacher. Mark Dutch, 40 trades, 16K, you suck. Yeah, cheers, bro. Cheers, bro. You suck. Look, man, for me, it's the trade. I don't care about, look, the money helps. Don't get it twisted. You know, it's nice to be rewarded for your efforts of watching this mad thing. When all my friends were out fucking, I was doing something else. I was on my charts. That's straight up, bro. Okay? Now they're still fucking the same females, and I ain't even gonna say it, bro. You know, this is my relationship. You know, if I speak to a woman, I feel bad because I'm cheating on the charts. I'm cheating on the depth of market. Jokes aside, but that's my craft. You know, I've committed best part of nearly 17 years of my life in this. 17 years. And that's the problem that people have with trading. You, as a trader, you can make it look so easy. So easy. But it's not. It's not easy at all. Okay? Back to the loss. $1,300. That's the start. That's the start of the trading day for me. I started with $1,300 loss. Okay? Some days it's not like that. Some days you can be down 5K in 15 minutes. Now, some people they'd wet themselves and they'd see their balances drop. I've been there, done it. Now, I've re-engineered my brain to not even think about money anymore. It has to be about the trade, the execution. Obsess yourself with execution because money will only return. I got my position correct with the S&P and it paid out very well. Okay? It took me from this low to the vector candle recovery from 3 o'clock when I closed off the live stream and I waited for that move to happen. I traded outside of my window, but then coming in towards the close of London. So 3 hours and 15 minutes. 3 hours and 15 minutes. That's how long my trades took today to climb up. I had to sit through this dead area right here. But it took 3 hours to achieve what we achieved today. That was me. I didn't care what happened after that. Yep, it could have been more. Could have been a 30K day. Easy. Even more. Because I would have scaled into the position even more. And that I was only doing it with 4 contracts. Okay? If it kept on going up in my favor on the retrace back down here on the red vector candle, I probably would have doubled that and made it about 8 to 10 contracts. And that last sweep up right there could have netted a decent day, a very decent day. But we're just talking shit now. We shoulda, woulda, coulda. We finished the day on the vector candle recovery. That was my goal. That was my plan. And that's all I was interested in. Because if you do not add structure to your trading day, you ain't going to have structure. Whatever money you think you have made, you're only going to give back. You have to cut and say, I am done for today. The market does a great job of luring you in to make you believe it's going to continue. It does that. You do it on a loss and you do it on a win. People struggle to close losses the same way they struggle to close wins. They say losses are the hardest part. No, it's not. Losses are not the hardest part. Loss is something that you naturally want to avoid. Why is it hard to naturally avoid getting hurt? You ain't going to walk up to a dude in a bar and be like, yo, bro, I see you got knuckles the size of bricks. I would like you to smack me across the face to see if it hurts. He looks at you and he's thinking, bro, do you understand what you're asking me now? Do you understand? I have fists or knuckles the size of bricks. You want me to punch you in the face? Yeah, I do, man. Why is that? I just want to know what it's like. Shut up, he says to him. And he's like, no, just do it. He gets smacked across the face. The guy's passed out. He doesn't operate. And that's it. He's done. So why would you want to know more about a loss? Why should you want to know more about it? It's the simplest thing because we always want to be right. That's the problem we have. We want to be right. That's why we're saying, I'm not going to close the long. I'm not going to close my short. I'm not going to close it. No, it's going to go in my favor one way or another. The best way to put all of what I have just said into a single sentence or a couple of words is diamond hands. That's how diamond hands people think. Holders, in my opinion, would be the best swing traders because they can absorb drawdown. If they keep their risk correct, they can absorb wild drawdowns. They're used to it. All right? But as a scalper, which I would say a lot of you are scalpers, like give me a hey ya, type 1 if you are a scalper. Okay. Type 2 if you are a holder or a swing trader. Type 3 if you're both. All right. But I know for a fact that people that come into trading, their main problem is they want to avoid loss, but they will still entertain it. You know? 3, 2, 3, 1, 1, 1, 1, 1. Okay. Quite a lot of you. I try to scalp, but always lose. Listen, you can. This is how you know. I'm gonna sort out your comment TRB in a split second. Okay. Samuel. Hi Tina, can you please look at GU with the cycles? Pound sterling, yeah. Okay. All right. So looking at some dude pressed 4. What a guy. What a guy. Tino, do blue and purple candles recover faster than red and green ones? Listen, if you haven't done so, go to the Traders Reality website. Any questions you want about the hybrid system, they are on this Traders Reality website. Go and take a course. This course is free, ladies and gentlemen. It's free. It gives you everything that you need about the hybrid system. There is a paid course and it's cheap, but I challenge you to tell me, right, that the information in there is not worth its weight in gold. Okay? I never say that, but I know what value is in this. I know. In this one, Exo charts, cheap again. 5 hours worth of live trading to teach you how to read price from Exo charts. And it's not the way you think. That's one thing for sure. It's not the way you think. It's not a course that will say, wait for this to happen, look at this, wait for that. It's, did you notice how this happened? Did you notice how this happened? I traded exactly the same thing, and I traded it again over here, and I traded it again over here. Tell me why you can't find that repetition in your average trading day. Trading is about sample size, okay? That's what it's all about. And if you are a scalper, you have to give yourself a sample size. Don't come to the charts and say, I'm going to take 3 trades today as a scalper and then I'm done. You're having a joke, bro. Absolute joke. Give yourself a 20, 30 scalp opportunities. Now, with cryptocurrency, it might be a little bit hard. That's why I will always encourage you all to trade Ethereum. You must all trade Ethereum if you really want to see movement. Bitcoin is a little bit slow, let's be honest. And Bitcoin is ideal for the swing traders, okay? You want crypto on crack, you trade Solana, okay? Now, you probably all say there's other coins as well, but in my opinion, Solana, Bitcoin, Ethereum, they're the only 3 that I would predominantly focus on from a scalping perspective. I'd build positions with Bitcoin, but I would scalp Ethereum, and if I'm pissed off and I really want to get myself really more angry or frustrated, I will trade Solana. And if I really want to ruin my day and take it out on my loved ones and go absolutely crazy, I'd go and buy some XRP. I can't take that seriously, man. So yeah, jokes aside. Breaking down the hybrid system, please do it. It's free of charge. Get through it. It's only an hour long, all right? And these are additional courses that you can take, all right? Happy days. Now, any questions? All right, TRB. Let's have a look at TRB for a split second, and then we'll take some questions on Bitcoin. I'll take some questions on Bitcoin. 30-minute live. Damn. Not bad. Question by Singularity says, Tino, can you please look at TRB? Can you explain why these pumps happen? Is it buyers or sellers in your terms? Sellers. That's what's going on. Sellers. Look left. They were buying it over here. Now they're selling it. That's it. Now what's going to happen? Well, we're going to assume that they're going to try and bring it back down again to load up. If it's still got some weight, then it's going to keep going higher. But just be careful with this. Very careful. When the 50 EMA looks like a pencil, then you really need to just sit back and watch out because it can retrace pretty aggressively. Dead coin. Dean could have tripled my win. So say you make 2,500 unfunded account. How much do you make, bro? What do you mean? It's 2,500 with Apex. Your first 25,000, you don't pay anything. You don't get a commission. There's no commission to it. They just give you the full amount, which is quite mad, really, because they don't anticipate traders to get anything above 25K. That's the truth. You know, just in this account right here, I'm at 70,000 already, but I've already made withdrawals. This was at 78,000, and I've already made withdrawals from this account, and it's brought it back down to 70. So I've got now effectively a 20K threshold. Okay, I can withdraw again and bring it down. Say take off 10K, and then I'm at 260, and then just build it back up again, and that's it. You know, but because I'm above that threshold, once you withdraw 25K, then you effectively have the 90-10 split. But they don't anticipate traders to do that. They really don't. In my opinion, I don't think. That's why that threshold is so high. You know, they can anticipate people to make 6K. They can anticipate that. And that's the minimum amount you need to have a withdrawal to be eligible for it. The max you can withdraw on a new account is 3,000. And then that has to be done over 3 months, which means that every month for 3 months, you withdraw 3,000. Then after the 3 months, you'll be able to withdraw whatever you want. But it does help you to have a balance in there and stick and leave some flexibility because of days like today. You could lose $1,300. You could be down 5.5K. You don't want to make 10K and then withdraw 5, and then you go on a drawdown and have a 2.5K drawdown. You're like, oh shoot, I'll lose the account then. Then you have to go through that madness of actually having to pass another account. So yeah, that's why, in my opinion, and you've got to have several accounts as well. I've got about 13 funded accounts, about 2.8, I think about $3 million in funded capital, just under $3 million. And we just literally trade one account, but I trade them all at the same time, depending on where the asset's moving from. If I'm in a drawdown on one account, I'll then load up on the lows again of another or go short on another. I'm using all accounts. That's why on these positions here, that's why you've got different positions all over the place. That's why I've got different positions. Some are at a loss, some are at a win. And I'm always like, I'm quite an aggressive scalper, very aggressive. And that's why I've got such a high volume of trades, you know, and that's the story there. Okay. Tino, the stock father. Thank you. Telling his wife, never ask about my trades. Guys, go and invest in yourself. Platinum changed my life. Stop losing. Oh, happy days, I am. Thank you, man. Mad love. No way Tino is aggressive. You don't think I'm aggressive? Do you not think I'm aggressive? Please provide an XO chart for Bitcoin trading. Most of the trading available are for S&P. I'm a member. Please provide an XO chart for Bitcoin trading. Do you mean a template? There are templates. There are templates for you. Just check the Discord if that's what you're talking about. I absolutely think you're aggressive. I'm not aggressive. No, live trading. Okay. There is live trading on Bitcoin. Okay, then. Yeah, all right, and fine. Are you going to teach Jigsaw? Yes, I'm going to do the Jigsaw. I'm going to do the depth of market session with the guys. Just getting the time in. I want to get it arranged so that people have and can get a schedule in rather than me saying, hey, we're going to do a live stream today and it's going to be on the depth of market. I want to make it so that people can schedule it in and they can effectively get the time to sit through it and, you know, be ready for it per se. Okay. I think you're a runner from Steve, maybe. Okay. Would you recommend scalping for beginners? Would I recommend scalping for beginners? Yes. I'll tell you why. Because you'll get to learn about yourself sooner. You can be a swing trader, and then you could go on very good variance on swing trading, and you can win. All right? And you can win big. But the art of trading is the consistent scalps for me. I like the idea of going in, out, fast in, fast out, fast in, fast out. That's me. You might like the idea of opening 2 trades a week. That might be enough for you. You win those 2 trades, you're a king. Then the next week comes, you lose. Oh, you have to sit through a whole drawdown, go to bed with the pain in the head about, oh, I'm in a drawdown of about 5K on my swing trade. You know you're not going to hold it for long, but you're in a drawdown of 5K. Sorry, I wouldn't waste time holding a 5K drawdown. I would get it closed off and scalp my way out of it. That's exactly what we did today. Remember, this account was $1,300 down. I scalped my way out of it. And that's what scalping allows you to do. So as a beginner, the first thing you need to work on is not how to make money. It's how to learn to execute. Learn to say, yes, I'm going to take a trade. And this is one big thing as well. Procrastination. Funny. One thing you've got to say to yourself is you've got to take the trade. You ain't going to know anything about the markets if you don't have risk in the chart. You won't know. Like, look at this move right now on Bitcoin. Happy days. It's going up. It looks like it's going up from this point. If I think Bitcoin's going to go up and recover this area of vector imbalance over here, what am I going to do? I'm going to sit there and wait for it to do it? Just to say, yeah, I was right? Put some money down. Take the trade and manage it. Focus on what it's not doing. Focus on what it's not doing. What does that mean? Well, focus on it not going down. So what are you looking for? You're looking for reasons for it to go down. And the more reasons you get for it to go down, or the less reasons you get for it to go down, the more reasons you're going to have in believing it's going to go up. Okay? Because that's the way the market works. They want to make you believe one thing is happening when they're preparing for something else. The same way you look at the bids and the offers. Remember what we said yesterday in the live stream? Remember? Go and watch the FOMC. We said that we're going to see Bitcoin come up, going to retrace back in. The bids are going to get triggered inside of this range and then move away from there. There's that drawing. Go and watch yesterday's live stream. They did just that, you know, because we understood that the nature of price is if the bids mean business, they're going to step in at this point, which is where the rise, the retrace, and then the continuation out. Happy days. They did that. But I understand it because I've seen it happen so many times. I take an extreme of a range. Look, an extreme range. Then I start focusing and paying attention to it. And historically, I know that at extreme ranges, I'm going to see this sort of behavior. Okay? Yes, 435 of you like the stream. Only 1,500 of you are in here. Oh, I'm sorry, only 430. Like the stream, ladies and gentlemen. What's this? Not aggressive. You have a dash cam, Tina. Do I have a dash cam? So, no. Yeah. No, I don't. I am the camera. I need to be looking at where I'm going. I'm going to be paying attention to what the camera's doing. So if it's a funded account, does that mean you can be more aggressive since it's someone else's funds? No, you can't. You cannot be aggressive. You cannot be aggressive. You have to know how to use your aggression when you're using funded accounts. That's why they have certain parameters that are so difficult for people to get used to. Like 5%. Like, you know, some people, that 5%, you know, in crypto, it's all about the 50% drawdowns and be like, yo, man, we're all good. You know, so just take that into consideration. Okay, then. I missed out on tens of thousands because I'm scared to lose. Because I'm scared to lose $100 over gaining thousands. My TA is really good, but I have no confidence in myself. Again. You're scared to lose $100. If you're scared to lose $100, trading is not for you, man. You can't. Don't put yourself under that pressure. You have to think that $100 is out the window. But would you spend $100 on a pair of shoes? No hesitation. Because there's a result to it. There is an end result. You can't think like that in trading. All right? Why is having a business no different to taking a trade? There's risk. There's no guarantee that any of you as business owners, there's no guarantee your customers are all going to come one day. There's no guarantee that you're going to see exactly the same people every single day with the same amount of people coming in every day. It's always going to fluctuate more or less. There's no guarantee. You don't know. But you take that risk. You absorb that risk. You're used to it. Same thing in trading. You know? Tino isn't aggressive. He's peaceful as Kung Fu Panda with inner peace. Dude, man. Dude. Sorry. Here we go. Let's just check GBP USD for a second for my guy. Yeah, GBP USD. Tomorrow, you're probably going to see GBP USD. In terms of the cycle, all right, the logic would say go to the 4-hour time frame, all right? And this was from previous. Go to the 4-hour time frame on GBP USD, okay? And when, no, not the 4-hour. We've got a very deep level here. You've got W formation, rise up, retrace level 1. That's a level, a big level, okay? Now, in order for this level to be validated to continue higher, it needs to break out. In principle, my opinion, okay? This right here is the valid level, but this stop run out and back into it is where you're going to say to yourself, you know what? I'd need to see it come up a little bit more, because if it can come up a little bit more, that doesn't mean you should be going long. It means that you should be preparing yourself to run shorts, because they're in that corrective phase. But you've also got to understand the dollar dominance. In my opinion, I'd be looking at what euro's doing rather than the pound, because euro is 56% of the dollar dominance, all right? So just take that into consideration. Look at euro and the dollar dominance, because the pound only makes up 9% of it, all right? And assets are short-term moving up to come down. They're not locking in the funds just yet. They're bidding it, they're buying it, but then smart money's buying, okay? Smart money's buying here off the back of people selling. So they're still in the frame of mind to sell. That's what I'm saying, okay? All right, then. What do you look at before even looking at the charts? The charts. That's the truth. Ladies and gentlemen, mad love and respect. I hope you enjoyed tonight. Sorry it's been another long one, but I hope it's been filled with enough information for you to walk away with it from a psychological point of view about trading. It's a messed up game. It really is. All right? But take your time. It's all about execution. Okay? Make sure you like and subscribe on the way out, ladies and gentlemen. It's non-farm payrolls tomorrow. Mad love and respect. Peace.